For years, XRP was kind of the wild child of digital assets, right? Always on the edge. Well, today, it's sitting right at the heart of traditional finance. We're going to break down exactly how this happened and why this wave of regulated XRP products is nothing short of a revolution for Wall Street.
This sentence right here, this is the whole story in a nutshell. An asset that was once just for crypto specialists is now a tool for the biggest financial players on the planet. I mean, XRP has officially crossed the bridge into the big leagues of institutional finance, and believe me, there is no going back.
So here's how we're going to unpack this massive transformation. First, we'll look at XRP's dramatic debut on Wall Street. Then we're going to ride the absolutely incredible ETF wave of 2025. After that, we'll explore the brand new toolkit investors have, watch the financial giants battle it out in a fee war, and most importantly, we'll follow the institutional money that proves this is the real deal. And finally, we'll ask, what does all this mean for XRP's future?
Let's be clear, this is so much more than just a new product launch. This is a fundamental rewriting of the entire narrative. What we're witnessing is XRP's evolution from a speculative token into a regulated, fully integrated piece of the global financial system. It's a huge deal.
I mean, just look at the contrast on your screen. It tells you everything you need to know. Before, the conversation around XRP was all about legal battles, uncertainty, and huge barriers for any serious money to get involved. And now the conversation is about institutional-grade, regulated ETFs and how they stack up against Bitcoin and Ethereum. The entire debate has been completely redefined.
What's truly staggering about this whole thing is the speed. I mean, this was not some slow, gradual adoption. No way. It was a straight-up deluge of products that hit the market in 2025, creating this insane wave of momentum that just felt unstoppable.
Let's just walk through this timeline because the pace is, well, it's remarkable. It all kicks off in April with a leveraged product. By June, Canada is already on the board with a spot ETF. But the main event, that happens in September, when the REX/Osprey ETF launches in the US and just shatters volume records. By November, the floodgates are wide open, and giants like Franklin Templeton are jumping in. In just a few months, the entire landscape was transformed.
So, with this explosion of products, investors suddenly have a full menu to choose from. Now, an ETF, or exchange-traded fund, is basically just a way to buy into an asset like gold or, in this case, XRP, on a normal stock exchange. It's a crucial bridge. And it's really important to understand the different options because each of these new XRP ETFs is built for a totally different strategy.
The spot ETF. Now this is the true game changer. Why? It's simple, really. The fund physically buys and holds actual XRP. That means the value of your ETF is directly tied to the asset's price. It's the purest, most direct exposure an investor can possibly get. It's the crown jewel.
Then you've got these leveraged ETFs. These things are built for speed. They're for short-term trading. Their whole goal is to amplify XRP's daily price moves, usually by 2 times. Now, while that can double your gains on a good day, you got to remember it also doubles your losses on a bad one. These are definitely high-risk, high-reward instruments.
And this just lays out the difference perfectly. A spot ETF, that's for direct, long-term exposure, holding the real deal. A leveraged ETF, that's all about juicing short-term daily returns. And it does that by holding derivatives and contracts. They're 2 very different tools for 2 very different types of traders.
And finally, we're even seeing these super sophisticated strategies pop up like income ETFs. So a firm like Amplify isn't just buying and holding XRP. No, they're actively selling options against their holdings to generate a steady income stream for their investors. The fact that products this complex even exist is a huge sign of a rapidly maturing market.
You know, whenever you get this much competition flooding into a new market, one thing is absolutely inevitable: a fee war. Every single major asset manager wants a piece of this new pie, and they are fighting tooth and nail for it.
So here are the main players and their game plans. You've got REX/Osprey, who just burst onto the scene with that record-breaking launch volume. Franklin Templeton is playing the low-cost leader, coming in with a super aggressive 0.19% fee. Amplify is justifying its higher fee with that complex income strategy we talked about. And Canary Capital? They just proved they could attract a ton of money right out of the gate. But you know who the real winner is in all this? It's the investor. You get more choices at better prices. Okay, but launching products is one thing. The real test,
The ultimate proof is whether the big institutional money actually shows up to the party. And in the case of XRP, oh boy, the answer was a resounding yes.
Take a good look at this number, $37.7 million. That wasn't a week, that was the trading volume on a single day, the very first day of the REX Osprey ETF. And this wasn't just a good debut, it was the single best debut of any ETF in the entire year of 2025. Institutional demand wasn't just knocking on the door, it kicked the door clean off its hinges.
But the capital avalanche didn't stop there, not even close. Shortly after their November launch, just two funds, from Bitwise and Canary Capital, pulled in over $422 million. Let that sink in for a second. Nearly $500 million of new money poured into this asset in just a matter of days. The scale is it's staggering.
But for me, this is the most telling number of all. This is the definitive sign that something has fundamentally changed. During a really shaky week in November, when there was panic in the broader market, money was fleeing from other crypto assets, but XRP ETFs, they did the exact opposite. They attracted nearly $180 million in new capital.
And this chart, wow, it just says everything. While over 1.7 times billion with a B was flowing out of Bitcoin and Ethereum ETFs, 180 million was flowing into XRP ETFs. This right here is the paradigm shift in action. For some of these major investors, XRP is no longer just another crypto, it's now being used as a key tool for diversification.
So when you put all of these pieces together, the conclusion is pretty undeniable, isn't it? We are witnessing the official graduation of XRP into a conventional financial asset. The long chapter of doubt and legal battles is over, and an entirely new one has begun.
And this new era of legitimacy, it's built on solid pillars. We're not talking about assets on some obscure exchanges anymore. We're talking about listings on the NYSE and the NASDAQ. The products aren't managed by unknown startups. They're handled by financial giants like Franklin Templeton. And maybe most importantly, all of this is happening within a regulated, transparent framework. This is a graduation with honors into the financial big leagues.
I think this quote just sums it all up perfectly. The entire story has completely flipped on its head. We've gone from talking about lawsuits and regulation to talking about management fees, capital flows, and investment strategies. You know, the language of any other major Wall Street asset.
And all of this leaves us with one final and really crucial question. Now that the institutional floodgates have been thrown wide open, the debate isn't about legitimacy anymore. That's settled. The real question for the future is this: what will XRP's true role and its ultimate scope be in the global financial architecture of tomorrow? The game has fundamentally changed.